technical analysis for August 26th to 30th of 2013. I apologize for not posting a video last week. I was away and I couldn't get the internet access that I needed. And then this week I've been sick. So please bear with me. I will do my best to enunciate and be clear for you in order to make sure that the presentation is good. I would say a sideways week in the TSX. Nothing jumping out at me this week that really pushed us forward. Remember, we're going to take a look at the TSX, the Focus 5 stocks here at Train to Invest, gold, silver, oil, and several commodity-related ETFs. Here is the 3-year weekly chart for the TSX. And as you can see, the bar here isn't too much longer than it has been the last 3 weeks. Unfortunately, we did close lower than we opened for the week. Not a good sign. Strong momentum is pulling away from the index as a whole. And as you take a look at the RSI and the stochastic, you can see the RSI is heading down. Stochastic is at an inflection point, but it looks to be crossing to the negative side. But remember, on the longer-term charts, we want to look at the MACD and the MACD histogram. Now, the MACD is showing positive divergence on the positive side of the zero line, which is good, we want to see, but the MACD histogram bars are shrinking, which is not what we want to see. We want to continue to see this divergence grow when it's on the positive side or the upper side of the zero line. So TSX, personally, I think the last 3 weeks has been very sideways, and that's contributed to this sporadic movement all across the TSX itself. Looking at the 6-month daily chart, you can see we started off the week fairly high, close to the 12.8 mark. We broke through 12.8, but then throughout the week crashed back down to 12.6, slowly built our way up, and then on Friday we have a close lower than we opened. And this is most likely due to the long weekend here in Canada. So if you're a Canadian or if you're trading on the TSX, you know you have Monday off and the market will be closed. MACD and the MACD histogram, fairly flat. I mean, the MACD just is barely below the signal line, and the histogram bars seem to be about the same, and they're just underneath the zero line bars. More importantly, the momentum does seem to be pulling away from the TSX, or at least on Friday it caused momentum to shift away and down. And again, we could see this, well, most likely we'll see this reverse throughout next week. I would expect it to come back down to 12.6, maybe touch or even break through before turning higher. So nothing to be too worried about. Again, we are really in limbo until we see what the Federal Reserve does in the next set of meetings, if they begin to taper the bond buying program, or if we see the United States begin to enter Syria, which in itself is a whole other fundamental analysis story. Now this is, again, a new slide here that I'm beginning to introduce onto our weekly technical analysis. And as you can see, on the left-hand side, everything starts out the same. And on the right-hand side, it shows its performance over 6 months. Now this is the TSX versus all of its indices. And what's the point of this chart? Well, we want to look at the indices which are outperforming the TSX. That means that's where the money is flowing, and that's where we want to be looking at to best make our investments. So we have a blue, red, orange, and green line, which is above the black TSX in the middle here. As you can see, it's kind of at zero. Over the last 6 months, the TSX itself, as an index as a whole, hasn't gained or lost too much more than 0%. So we know that if you invested in an index fund, you would have made 0% in the last 6 months. Not what we want to do. Just looking at the chart itself, we can see that PTCD, consumer discretionary, consumer staples, energy, and financials all have posted positive growth over the last 6 months. Over the last 6 months, consumer discretionary has grown by 19%, consumer staples by 14%, energy by 2.8%, and financials 3.65%. So obviously the money has been flowing in the consumer discretionary and consumer staples. So that's where we should be focusing. If you're looking for companies, new companies to invest into, you should go to tmxmoney.com, look under the TSX for its constituents, find out the major players for both consumer discretionary and consumer staples, and potentially they could be a great trading boon for you. Just by looking at the chart itself, you can see consumer staples is beginning to turn higher. That may be the next avenue for growth. And you can see the financials have had a bit of growth since last week, and that's due to the positive banking results we've seen from the 6 major banks. Here is the oil chart over the last 6 months. And as you can see, last 6 months has gone up by $12 and almost 13%. We had a bit of a pullback because the United Kingdom has said they will not enter Syria as of yet, and so that would have pushed tensions higher, and obviously Brent and West Texas prices would have jumped higher as well if the United Kingdom had said we're going to have a significant part in helping with the Syrian conflict. Now, the attack of the chemical weapons has caused international controversy. Will the United States have a role to play? We'll have to wait and see. President Obama is still waffling over the decision. It's not something you take lightly, but if there is any international, I don't want to say interference, but international moves made towards ending the conflict in Syria, obviously oil will push higher, and that will help with prices moving up. This is the 3-year weekly chart for Enbridge. As you can see, over the last 1, 2, 3, 4, 5, 6 weeks, we've seen declining closes, and the trend is downward. Not exactly what we would like to see. However, this week, ever so slightly, we've closed higher than we opened. We touched the 42.50 mark in terms of our trend, and we didn't break under and stay under. We closed higher, a great sign. Now, the MACD is obviously showing this steady decline, and obviously it's a very bearish signal. The MACD histogram bars are continuing to grow, but it looks like things may start to change. Momentum is starting to turn. RSI starting to turn curve upwards. And here on the stochastic, we do have an inflection point. So on the weekly side of things, we may have found the bottom like we did several, almost 9, 10 weeks ago. We touched 42 again, and then went on a run up to almost 47. Enbridge has been very range-bound over the last several weeks, but that plays into our hands in terms of timing the market. This is the 6-month daily chart, and as you can see, Monday, Tuesday, Wednesday, Thursday, Friday came down, almost touched 42. We didn't touch 42. We didn't break through 42. A very positive sign, and then we headed higher and closed above 43. Great, great momentum. Great news. Should be a factor for next week, potentially even hitting 44. MACD and the MACD histogram. The histogram is pretty much at 0. The MACD is at an inflection point, and it looks to be that it will cross over. Now, if the MACD crosses over, again, it will be a good buy signal, but the momentum is there with the stock. RSI is a bit flat. I would assume if the Friday bar was bigger, momentum would have been turning higher for the RSI. But the stochastic likes what it's seen. We've seen the latter half of the week showing growth, and I would assume that next week the growth will continue. Could we break through 44? It's a definite possibility. With continued tensions in the Middle East, this could buoy oil prices and help push the stock higher. But at just above 43, we are in a good position, especially not breaking through 42. IMO, bit of the same kind of story. We had Monday, Tuesday was weak. Wednesday, Thursday, Friday was growth, which is good. This is the 3-year weekly chart. We had the 4 weeks ago, or I guess the beginning of the month, you could say, started off here, 1, 2, 3, 4 weeks of growth. Positive news is that we see the close is higher than the open. We couldn't quite break through 45, which would have been fantastic, but we touched and came back down. But again, closing higher than we opened is positive. The MACD showing, again, positive divergence above the zero line, which is what we want to see. And the histogram bars are fairly flat, but they're all positive. So the MACD and the MACD histogram are showing good signs of strength. Momentum, both green, RSI and stochastic, loving what we see, and that's to be expected after 3 weeks of positive growth. Could we see next week a bit of a decline? Not 100% sure. It all really depends on where oil prices move over the week. If they continue to move and stay high, we could see it possibly break through 45 next week or the week after. 6-month daily chart, not necessarily what we wanted to see. We do have a great gap for the week, almost $1.50 in change from open to close, or from low to high, sorry. But we did close at 44. Friday's close was lower than its open, but again, we have to factor in the impact of the long weekend. Momentum slowly pulling away. It did touch 45 twice, but couldn't quite break through, so it was expected, obviously, to pull back a bit. Good thing it didn't close below 44 or too far below 44. That would indicate that their momentum is definitely fleeing. I would say this is similar to the profit taking, and we could expect it to try again to break through 45 sometime next week, possibly Wednesday, Thursday, in the middle of the week there. MACD and the MACD histogram both positive, although the histogram bars are shrinking. Still above zero, so I'm not too worried. And momentum is clearly showing what's happened from Thursday to Friday's close, to be expected, but again, not too worried. We could come back down to this 43.50 mark here again before turning back up and turning higher. But again, if it breaks through 44, I'm not too concerned as of yet. Suncor, this is the weekly chart, the 3-year weekly chart. Great run-up, pretty much since this 4 weeks ago. Again, a positive turn-up. We have rising oil prices. We have these Warren Buffett purchasing of the stock. So good news overall for Suncor, and the MACD and the MACD histogram are resonating and showing that. Momentum did pull away as we closed lower than we opened for the week. To be expected, the good news kind of pulling back. But overall, we're breaking above 35 for the 3rd consecutive week, so that is definitely a good sign. Looking at the 6-month daily chart, didn't exactly close where we wanted it to. I would have preferred it to close above 36. Didn't happen. We closed below 36, closer to 35. And for Friday, we closed lower than we opened. Definitely momentum pulling away. I feel personally that the lack of commitment by the United Kingdom has sapped some of the momentum from the stock, because people were expecting potentially another ally with the United States to intervene in Syria, and that would have obviously buoyed oil prices. So with that bit of momentum pulled away, investors did have a bit of a sell-off since Wednesday, and that's indicated by the momentum here on the RSI and stochastic, both heading lower. MACD and the MACD histogram both turning down, but from Tuesday to Friday, we see a big drop, $1, $1.25, even almost $1.50 for Suncor here. The positive thing to note is that we're still above $35. So good territory. Hasn't been here in a very, very, very long time. So you can expect a bit of a pullback. There is some support here at 35, a little more here at 34, but I would expect next week to come down, touch 35 before turning back higher, unless, of course, there is some sort of external news which changes the scenario. Royal Bank, 3-year weekly chart, has been trending sideways since its record high of breaking through 65. There hasn't been a ton of movement. We had a very positive earnings report this week. And as you can see, we pretty much we did close around 65 and lower than what it opened for the week, but just barely. Nothing too significant to take away from that. It tried to break through 65, couldn't stay there, and there was a good deal of movement to make some profit this week. Looking at the MACD and the MACD histogram, still both positive. The divergence is growing on the positive side, so great news there. Histogram bars are fairly flat, but they're positive. Can't complain too much. Momentum slightly pulling away this week. You can see on the stochastic it is turning somewhat down, but it's stayed fairly flat, and that's typical of a sideways trend movement. Looking at the 6-month daily chart, the sidewaysness is really evident here. We can see between 63 and just below 66 seems to be the trend, and there is some momentum here at 64, support here at 64. Friday, we saw it close just under 65, and that's definitely due to the selling before the long weekend. And momentum and the MACD, both all blue. We do have the stochastic at an inflection point, and it looks to be crossing down, but I would expect next week to see the same sideways movement. So if you're in above 65, you can expect that the sideways movement will occur and possibly even come down to 64. I wouldn't stress too much about the dollar movement, but remember the range does seem to be between $63 and $66. Toronto Dominion, as you can see, a new 52-week high was posted this week due to the excellent earnings reports. We did close higher than we opened, just under the $90 mark. So obviously things at Toronto are looking really good. TD Bank seems to be doing quite well. MACD is loving it. Growing divergence on the positive side. We want to see the MACD histogram bars are slightly increasing. So that's, again, very positive in what we want to see. RSI heading higher, almost at the 70 mark here. So it's going to hit the top end of the range. And stochastic is pulling down, but that's obviously due to some movement on the selling on Friday. So I'm not too concerned about that. New 52-week high. I'm wondering how long it can sustain this upward movement. And with the new mortgage rules and stuff coming in, what's going to happen? But that's a worry for another day. On the technical side of things, Toronto is doing fantastic. 6-month daily chart, as you can see, Monday, Tuesday, Wednesday, we had a declining trend, and then Thursday, with the earnings report, it popped up, broke through 90, closed just under 90. Friday went even higher, and then closed again below 90. Momentum obviously pulling away on the stochastic simply because of the movement on Friday. RSI is a bit flat. I'm not exactly sure where it's going to go. I could see it coming back down to 88 as some people take profits away. But again, the range seems between 86 and now 90. So this $4 range over the last several weeks, showing how well TD is doing. MACD and the MACD histogram are indeed showing the positive signs. But again, closing below 90 instead of above 90 indicates that momentum is pulling away. But then again, we have to factor in the long weekend selling factor. Taking a look at gold, over the last 6 months, it is only down just approximately 12%, or 11.5% to be more accurate. A vast, vast change since a couple months ago when we were looking at a much steeper decline. We've climbed up from 12 to 1,400. A good appreciation. Obviously, this is going to look good for the Bull Plus ETF and the gold ETFs as well. So gold prices holding steady around 1,400. A little surprised that it was able to stay this high for this long. Is the gold trend over? I don't think so. As closer we get to the bond tapering, the more likely investors are going to start ditching U.S. Treasuries and head towards gold. So we could see 1400 stay around for a while, and if the tapering is as excessive as we think it may be, may push gold higher. CGL, iShares Gold Bullion Fund, came a bit down on Wednesday, Thursday, Friday as the gold prices dropped at the end of the week, but that's okay. We're still above 12, and even though momentum is pulling away, the MACD is still appreciative of the appreciation of the gold index itself. Once gold starts to turn around, remember this ETF does follow gold prices consistently. Momentum will shift as well. Gold Bull Plus ETF, Monday and Tuesday were good for the ETF. Wednesday, Thursday, and Friday, as gold prices fell, so did the ETF's prices as well. MACD, in the MACD histogram, we do have an inflection point. It would probably head lower over the next couple of days as gold prices continue to fall just ever so slightly. I don't expect a steep fall, but I do expect a bit of a contraction before it turns up again. So as you can see, RSI and is blue, could have given it a red to indicate negative, and stochastic is clearly negative as momentum has fallen over the last 3 days. Now, as gold prices have fallen, the Bear Plus ETF has turned higher. MACD crossover, we have RSI turning higher, and the stochastic and a very steep uptrend. Friday closed over than it opened, but for the week closed higher than it opened. So positive momentum there, positive growth, are expected to try and break through 1750 over the next couple of days. But until gold prices turn around, this is the ETF to be in. Silver prices over the last 6 months have fallen by only 17.7%, off from its lows of 23, 24, even 30%. So we've seen, again, appreciation in the gold market and appreciation in the silver market. Again, as we head towards the bond tapering news, I would expect these precious metals and currencies, to be honest, to appreciate quickly over time. Again, just like gold, I do expect there to be a bit of a contraction over the next couple of days, maybe in a week or so, before turning around and going higher. SVR, the iShares Silver Bullion Fund, again, showing the declining prices in silver over the last 3 days. Momentum, obviously, moving away from the ETF. MACD, histogram bars are shrinking, but the MACD is starting to turn down, and of course, that reflects the declining ETF share prices. I would expect it again to come down, test 30, potentially even break through 30 ever so slightly before turning higher, if silver prices follow that pattern as well. Silver Bull Plus ETF, HZU, momentum, okay, same thing as the SVR chart. Momentum pulling away over the last couple of days. MACD looks exactly the same as the SVR. Probably test 10, potentially break through just underneath 10 before turning higher. And last chart of the day, HZD. Loved the decline in prices. ETF share prices bounced back up at $6 low. MACD starting to see that inflection point, potentially even a crossover. RSI and stochastic showing positive momentum. The depreciation for silver and gold could last either a couple days or even a couple of weeks, depending on how the market reacts towards the bond tapering. I would expect there, like I said before, to be a bit of a contraction, maybe next week and maybe even into early the week after, until the tapering starts to become more of a headline story. Once that becomes a headline story, silver and gold will turn around and continue its appreciation. So that is it for us this week. Have a great long weekend for those of you who have it off. If you have any questions, concerns, comments, please email me at joelchandran@traintoinvest.com. I'll gladly respond to your emails, and thank you for those who have emailed me. And check us out at www.changeinvest.com. Any questions about our program, check us out. Ask us. We have a new course starting on September 9th, Monday nights at 7 p.m. Central Standard Time, and September 18th, Wednesday nights at 8 p.m. Central Standard Time. So if you would like to be part of that, please let us know. We'll get you the enrollment forms and get you set up for that. So this is Joel Chandran at Train to Invest, wishing you an awesome weekend. Bye now.
The organizer